Hello, everyone. This is Lindsay Klein, host of the Buy the Books podcast and founder of Great Bookkeepers Wanted, empowering bookkeepers and the businesses that need them. I want to talk today about nonprofit bookkeeping, which can differ quite significantly from small business bookkeeping. There's one area in particular I want to talk about, which is how to handle revenue recognition when it comes to nonprofits. So let's dive in. So what I want to talk about today comes from the 605 Revenue Recognition Guidance from FASB. This is commonly known as GAAP, Generally Accepted Accounting Practices. We don't typically, as small business bookkeepers, care that much about GAAP because most of the entities that are our clients don't need to adhere to GAAP. Typically, for small businesses, GAAP is not relevant until they reach $26 million in revenue or more, which, as we know, most of our clients are never going to see that. Now, in an effort for all of our eyes to not be glazed over going through this, I created a much more pleasing Canva presentation. I would rather look at this personally, but you saw the URL there if you want to go onto the FASB website and dig in to your heart's desire. So the first question to answer is whether or not this nonprofit is required to file under an accrual-based method. Now, for most small businesses, that's never going to be a requirement. But the threshold for nonprofits are much lower, and there's a lot more exceptions for nonprofits having to do accrual-based accounting. And I'm going to get into that more later about what kind of nonprofits, what are the thresholds, what are the exceptions, so that you have an awareness of when that's actually required. But that is the first question, because what we're trying to answer in this nifty little chart is when you have to recognize pledges as revenue. Many of you may not have even known that that was even something nonprofits had to do. But a lot of nonprofits must recognize pledges as revenue. And pledges being a promise to give a donation. A pledge does not mean it's come into the bank account yet. In most cases, pledges are, I shouldn't say most cases. In many cases, pledges are multi-year pledges. And so the duration of that pledge could go on for a long time. But in many cases, nonprofits must recognize pledges as revenue. And that's what I want to talk about today, because I think this is an area that is misunderstood and it's not well known that this is even a thing that nonprofits need to do. So the first question is, does the nonprofit use accrual-based accounting method? If not, then it's recognized just like any other cash basis entity. Once the money comes into the bank, that is when it's recognized. That's pretty straightforward. If the answer is yes, that they do use an accrual-based method, then we need to continue. We have more questions. The next question is does the pledge have conditions? I'll give you an example of a condition. If a donor were to say, I will pledge $50,000 if you find other donors to pledge $50,000. That's a condition. So if it does have condition, if the answer is yes, it has conditions, then the revenue would not be recognized until that condition is met, or conditions if there's more than one condition. So in this example, if the nonprofit were to get donors to, other than the one that set the condition, if they were to find other donors to pledge $50,000, that condition has now been met, and therefore the original $50,000 now needs to be marked as revenue, recognized as revenue. Now, going back to our previous question, does the pledge have conditions? Let's say the answer is no, that the pledge was made with no conditions. Well, in that instance, now the revenue must be recognized at the time it was pledged. That's what I want to emphasize in this video. If you have a nonprofit that uses accrual-based accounting and receives a pledge with no conditions, that is when they recognize the revenue, even if the bank account hasn't seen it yet. I do, as a side note, want to mention pledges with restrictions, which is different from conditions. A pledge with restrictions is treated the same way as a pledge without conditions, meaning that it recognizes revenue when it's pledged, but if it has restrictions, there is supposed to be a disclosure, which is basically just a footnote explaining the restriction. What's the difference between a restriction and a condition? Well, we already talked about conditions, right? I will give you $50,000 if you get other donors to give $50,000. That's an example of a condition. A restriction is basically a designation for where that income should go. In other words, let's take an example of a church, because this is pretty common in church settings. A lot of churches will do a building campaign. Well, they will ask the members to pledge money for a building. Building campaign is what they're often called. That's a restriction. It's essentially saying, I'm making a pledge, but it's restricted to going to this use. That's not the same as a condition, because the pledge is there and it's just designated towards a specific thing. So that's treated just the same as a pledge without conditions, but with a footnote, a disclosure. All right, so let's talk about, when does a nonprofit need to be accrual? When is that requirement there? There could be any number of reasons why a nonprofit is required to use accrual-based accounting. First could be, it has to, for some reason, adhere to GAAP. That may be a requirement by the IRS, but that's probably unlikely unless they're doing 26 million or more. It could be a requirement by a donor. It could be a requirement by a grant. There are any number of reasons why a nonprofit is required to follow GAAP. And if you're required to follow GAAP, then you're required to have accrual-based accounting. Grants is another reason. If the grant is $750,000 or more, then automatically it's required that it be accrual-based accounting. But there are a lot of grants that are less than $750,000 that will require the nonprofit use accrual-based methods. So even if the grant's less and it's not technically required under regulations, it could be required by the grant itself. Then there's state considerations. California, for example, requires accrual-based accounting. So you need to look at the state regulations, because it may not be a federal regulation, it may not be a grant regulation, but it could be a state regulation. And then, of course, there's the IRS, which we've already talked about. You have to be pretty substantial in size before the IRS threshold comes into play. However, one thing I do want to point out is nonprofits are required to file a 990 form. And on that 990 form, there is a place for you to select cash basis accounting. However, there are some sections of that 990 that require accrual basis figures. So even when you're using cash basis accounting, there's going to be some things you'll have to track on an accrual basis. So be aware of that. There's a lot more you can get out of this on the FASB website. I recommend taking whatever information you want from FASB, throw it into AI, and ask it to give you the Cliff Notes. Unless you just really enjoy going through pages of regulations. But the main point I'm trying to drive home today in this video is that pledges can sometimes be required to be recognized as income. That's what I want to make sure all bookkeepers understand. Until next time, this is Lindsay Klein, founder of Great Bookkeepers Wanted, empowering bookkeepers and the businesses that need them.